movement, of which the options market is king in that respect. We're looking at essentially a $14 move, 13.30 in the market maker move. That's a little bit lower. This is based on the vol differential. We usually look at this $14. That's what? That's over a 10% move. And what is the market cap size, Blake, of NVIDIA?
3 trillion.
3 trillion. So it's just crazy.
A little bit bigger
nuts.
than 3 trillion.
This is why it's so significant, folks. And also, expectations are measured in earnings, right? What are they expecting? And so if we take a quick little peek here at Yahoo, they're expecting 64 cents as the earnings estimate. This is adjusted earnings. So we're looking at that one, not the GAAP estimate, not GAAP earnings. So we'll look at the adjusted earnings estimate, earnings production. We'll also look at revenues. Revenues are at 28.7 billion. And we can see the range of expectations. And as they give guidance, we can see the current expectations and gauge against that for current year and next year. So we have these ready as it kind of pours in here. But we're expecting big moves. We look at option implied volatility really fast. This is the first time, and maybe it's changed in the last 2 hours. We'll see. But this is the first time. So if we look at a dynamic here, look at the call side. The implied volatility is here. The put implied volatility is here. We have negative skew. Okay. Yeah. We're expecting the big moves to the downside for the first time this year. It's been skewed positively. Otherwise, the previous two earnings announcements. So this is a different feel, but the weight of this is huge.
Yeah, and it was interesting to me when we're looking at by the end of the week, the options showed more skew on the put side, but we had higher deltas, bigger deltas on the positive side. So you had a higher probability of moving up, but a bigger option or risk premium being priced to the downside. So your probability is pointing up, but your risk is on the down. So just to be clear on that.
Negative skew, right? You have essentially your skew diagram looks like this. So your mean is down here, your mode is here. And what that says is, yes, bigger chance of a large downside move, but your price movements are expected to be above average more frequently. So I expect, yes, they're likely going to be, but the stock's movement is not expected to rise as much.
So if we can dive into this while we're dealing with waiting for the numbers to pop in there and show us what's really going on. When we talk about valuations, that we want to see the valuations come back and have validity, what would make this move higher in your view? And what are the fundamentals that would support NVIDIA continuing to climb and be a $5 trillion company, bigger than any other company in the world, maybe even Apple and Google combined at some point? What would it take? What kind of earnings, revenues, or is there any fundamental that would support that from what you're seeing?
Well, I mean, look at this right here, forward P ratio 46. This is taking next year's earnings and saying we're still paying 46 times next year's earnings. You look down here.
And backward is 73.
You what?
And backward is 73. So we're trading at 73 from a trailing 12 months and 43 or 46 forward looking.
Yeah.
So kind of a little shift in the expectations there too.
The median for the industry is about 24. So the point being is that you're paying a lot, not for current earnings, which is 73 times. You're paying a lot for future earnings. Right. Price to book value, 63 times book value, Blake. 39 times this year's sales. I mean, my goodness. I mean, how much sales growth are we expecting here? I mean, come down here, 118% for current year, 38% next year. Well, let's just assume earnings doubles and it halves. And it halves this. We're still looking at high 30s, 23 times going at this obvious. This is next year's, but price to book value, we store a lot of money, free cash flow, during tremendous free cash flow. We're still paying 63 times book value, right? That's assets minus liabilities. Price to sales 39 times. So if revenue grows 100%, that gets halved. We're still paying 20 times sales. It's nuts. $3 trillion company.
Well, so what you're saying is we are always forward looking. Every market should always be forward looking. So you're saying total sales, which means gross profits really.
And not gross profit, just total revenue, right? All the money
total
coming
in. Total revenue.
Not even considering costs.
You're saying that we are valuing you at 20 times all of your revenue.
So 40 times right now. So if revenue goes up 100% this year, okay, all of a sudden this gets cut in half and you're at 20 times.
And so
That's still
you
a high
as a,
number, right?
yeah, well, you as a company are valued at
Value
all your
stock's less
income
than
and no
two.
other expenses, really.
Yeah. Yeah. Value stock less than two, but this has earnings. This company does. You can see you're paying just wild, crazy, wild, just crazy numbers here for this company based upon massive revenue increase and earnings increases. We look down here. How does this company make its money? You'll notice down here, right? SG&A, they spend very little for SG&A, pay very little for R&D, relatively speaking, to the rather large amount of money they're generating in cash. Virtually all of it flows to net income. This company doesn't manufacture chips; they design them. Other companies manufacture for them. So it's a great business if you can get it. But the problem is the TPU side of things. I mean, Google's almost completely divested themselves of graphics processors from NVIDIA. They're going the TPU route. Meta's going to go that route. A lot of companies are going to go that route.
Isn't
They
Microsoft
may
on that
have to
route too?
boost this dramatically to keep their edge.
Well, that's what my thought was. You have significant competition to, I mean, this to me, this is Beta and VHS and Betamax.
Yep.
They are the best at this moment. But if we shift technologies and they spend no money on the R&D, there not only is there no moat for someone else to come over and take over the processing cards, because someone else can step in and have someone else manufacture, because they're not manufacturing it. Someone else can have a chip design and have someone else
Right.
manufacture it, and there's no moat. There's no
Yeah.
protections for these guys. But if we leave that technology completely, then what do you got? You got the big old 18-inch laser discs that are worthless.
Yeah. And people have been talking about, oh, they're charging like tens of thousands of dollars. I mean, they're charging massive premiums for their products, and people have been taking it. How long are they going to do that? And again, right now you're seeing a lot of the cloud space. You're seeing Meta. You're seeing Google's already almost there, divesting themselves of NVIDIA processors. They're going the TPU route where they can vertically stack it. So again, there is risk here. The question is it going to be reflected in the outlook here? I mean, NVIDIA has been a company that said, hey, we're going to sell these processors to people with no cash. We're going to basically finance them to buy our stuff. Again, it's like, how is that a good business model? I'm just not sure. So
Yeah,
again, there's lots of positives. I'm not trying to deny that, but there's also risks. And so far, the retail part of the market is not pricing those risks in, whereas the hedge fund part of the market has been pricing it in over the last 6 months by reducing their exposure.
Well, and going back to that reduction of exposure, is this normal for the broad market? Is this normal for an individual company where they divest completely away, meaning the institutions, the large investors divest away and kind of leave the retail shareholder holding the bag?
Yeah.
Is this the greater fool's theory at this moment?
Absolutely, right? It's weak hands and strong hands. The strong hands are selling to the weak, which creates volatility. We go back to 2018, and this was about all these ASICs. We're mining crypto, yada yada. NVIDIA the lag kind of joining the fray. In 2018, they jumped in with both feet. Stock went from a split adjusted value of around $7.25 down to $3, lost over 50% of its value. We see these boom and bust happen all the time. And one that I talked about while being at TheoTrade was the one here in 2021. Chip shortage, right? But all of a sudden, an analyst here in December of 2021 talked about oversupply in some parts of their chip business. And again, the stock went from a split adjusted basis of 34 down to $10. These are big, big moves, right? We tend to get very over optimistic. Again, you have a high concentration of kind of retail trade in NVIDIA, AKA weak hands. They tend to sell at market, have stop losses. That's what we're seeing in NVIDIA right now. And again, the big money has been divesting themselves. Now, who's going to be right? We don't know. But here we get a data point to help give us some examples of who might be in the right position right now. And
so,
we don't know yet.
Do you think institutions are ever in the wrong position?
I think at times there may be. So I think the issue is sometimes they're underexposed, right?
Right.
And hedge funds lose money. I mean, they do.
Yeah. And I'd say that they're always
market.
wrong at extremes or in late adoption. And that's kind of the way I would see this. And this is not a late adoption situation. They're maybe not completely, something like crypto comes out and they probably didn't get in fast enough. But they're generally, I would say, institutions are not wrong at in the middle. They're wrong at extremes, either early adoption, they didn't get it on quick enough, or too high or too low, because that's what pushed it to those extremes. But NVIDIA doesn't feel like it's at one of the extremes and they're divested. I don't feel like that they're wrong at this point. They said, hey, this is too much risk for our portfolio and our accounts. And right now we're seeing sell-off. And so we're seeing the market
bit of
starting to
movement.
behave. Yeah, we just dropped $2 in a matter of a few seconds there. Now, does that mean the number's out? I don't know.
Yeah, we don't see any news over here. So again, feel free to comment if you find any. Yeah, we're kind of doing multitasking here, but you
We're
see any
watching
data,
three
feel
different
free to share.
screens. Yeah, we're watching three screens. If you see numbers, let us know.
Yeah, but we are seeing a little bit of negative reaction. But again, I think right now, again, as we're talking about extreme valuations, right? We're talking about, again, the rhetoric is at extreme in terms from the CEO. The realities, again, there's avenues away from NVIDIA. It's going to take a few years to get there. Google's an example of a company that has mostly gotten there. And again, we have a lot of retail exposure, less exposure on the part of the strong hands, meaning the funds. And so we'll see who wins out here. But again, the option market tells a story. And let's come back to here again. The option market tells a story here. It's shifting. But anyway, the point being is that put implied volatility is higher than call volatility. The crash risk is higher. So if it comes out, the company announces positive news, the upside's probably less than the downside. And so if we look at the upside, we got 140. So if we're skew, that's 15 points the upside. That's still within the one standard deviation movement. Man, if we missed the downside, we could go down to 90 in one day. I mean, that's kind of where we're at right now. We're on a wet banana. We're on a banana peel. If we slip, we're going to fall. And so you might see very muted upside activity if they beat, but there could be some really large downside moves if they don't. But the odds are they do beat, just by virtue of the probability is saying the skew says higher probability of an upside move, but the big moves are going to come to the downside.
Right. And so as we're watching these numbers, remember this $2 move, or $1.50 move.
Yeah.
We're still pricing in $14.
Yeah.
So
Bart
we've
says,
moved less than 1/10.
Bart says diamond hands. Where's Gianni? Yeah. Well, right. I mean, so we have this hodl, right? Hold on for dear life. I went to a rodeo this summer, and it's not easy when a bull is bucking for these guys to stay on, right? You have to be top of your game. These guys were more local, like state of Utah, maybe slightly around, but they're professional rodeo. There was 2 guys that made it 8 seconds on the bulls. I took a picture of those bulls and sent it to Corey and Gianni though when I was there.
There you go, because they're the perma bulls, and as you say, the good reference. So
so again, we'll have to see what happens. But yeah, so we're waiting to see what the number produces. So again, we know what the analyst estimates are. Now, sometimes they're a little bit different from one vendor to another. You go to Zacks, it might be a little bit different than Yahoo. I looked at it was 64 cents there as well. Again, we got the high and low estimate, but there's 3 things that are produced from this. Number 1 are the actual earnings and revenue numbers. Again, if you want to be long NVIDIA, you want to see them beat on both of those. You also want to see them raise guidance. So we talk about guidance. We're talking about current year is the most important if we have 2 earnings reports remaining. So if we go over here to financials, when does their fiscal year end? It's in January. So I believe we should have 2 reporting quarters left. So our focus is going to be on the current year estimates. This is the current high and low. So if they provide guidance or range of guidance, we'll have to match it against what's listed here and see, okay, are they adjusting it higher or lower, right? Current year's revenues are right here. The range 112 to 139. Are they adjusting it higher or are they adjusting it lower? And so again, we want to really, if you're bullish, want to hit on all 3 of those. Beat earnings, beat revenues, guide higher than analyst expectations. And we want to see the stock price respond by moving positively. And so we'll have to see what that happens there. So that will find out tomorrow.
Russ is asking a question. Is this like jury? The longer it waits, they wait to come out with the numbers. Is that a tell? Short answer, it can be, in my view. But a long answer for me would be, a little bit longer answer would be that I think they wait until options trading closes. So another minute and the regular trading hours and the option trading is shut down. And that's why they want to do it after that, so they don't get the crazy moves in the price until the morning when people can process what they said.
Absolutely. So we'll be on until 14:30 here. That's Mountain Time, because that is the center of the world, right, Blake?
That's
Mountain
right.
Time.
Yes. We have Silicon Slopes right here, right
We
in our
do, right?
backyard. Yeah.
To
This
be
is
honest,
the
I hate that
new
reference.
Silicon Valley. They call it Silicon Slopes because never mind.
It's against a wee little mountain, point of the mountain, but
Yeah,
there's some big
it's
mountains
on
to
a
the notice
foothill.
next to
It's
it.
on a foothill. That's true. No one would ski that foothill, but yes. So
They
yeah,
paraglide off it. They jump
yeah,
off it.
I have jumped off that mountain. I
Oh yeah.
have. I have paraglided. Uh,
You
no,
paraglided?
yes, I have.
Do you avoid
I
people when you paraglide? You don't buzz them like over their heads.
Oh no, this was not a this is not an ultralight. It was just paragliding. You run and jump off that mountain.
Yeah.
Yeah.
We saw, like, when I coached football, we'd be on the field, and these guys would come from the mount up on the mountain down, and like they're going over our heads. One time it was like literally we were in a huddle, it went overhead probably about a foot. I had some words with that guy.
Oh yeah, that's no good. No, there's a big field that everybody lands on up there in Draper. So that's
Yeah, point of the mountain.
so yeah, that is a wild feeling as I'm yammering talking about as we're watching this to run off of a cliff. That's a weird
Throw
feeling.
the shoot. You have to throw it. What do you have to do
So
there?
I was with the guy and he said, okay, we got this. You fill the wing first. So the wing is already tensioned. And that's the conference call, Liana. So we should get a number here in just a minute. So you'll get the number that'll get released and then we'll have conversations.
So if we go back here, you'll see that this shows the earnings report, and this right here is their conference call, right? Earnings conference call at 4 p.m. Central Standard Time, so it's in an hour, well, like 45 minutes. And don't be surprised that like sometimes you move based on the report, and then you get the CEO starts talking, and on occasion they'll step in it. I mean, they'll create some volatility just by virtue of their words. Clearly, I mean, nothing's landed yet. We're sitting here with just
Bated
with our,
breath.
just tense.
Twiddle your thumbs, my friend. So yeah, like he was saying, you can get a number and everybody will digest the number, and then you have the conference call, and they said, yeah, we're not going to do this so well anymore. That was kind of our peak. You might get hints and clues that is even though the previous quarter did great, it was an anomaly, or hey, this is just the beginning of a new contract. So you can get a real acceleration after the conference call as well, or complete collapse. Even with good earnings, you can have it gap down.
Yeah.
And James E saying SMCI is down 20%. We talked a little bit about SMCI earlier on my session, and just to keep in mind, it's 150th, so 0.006% of the size of NVIDIA. Will that have an impact on NVIDIA? Not directly, but it may be a tell. That would be a tell for me, James, is that CMCI or SMCI, if we're seeing decrease in demand, and look at AMD, look at Intel, and signs that we're seeing less demand for chips is a big deal. So we got Melu is saying 420. So we got another 2 minutes, and then we'll get a number. And look, we're right back to where we were. Now, this is a jumping off point for me.
I just pulled up on Twitter. I just put in $ NVIDIA, see if anything pops up here. Some guys already saying, earnings are out, adjust EPS is this. And I'm like, well, again, you can check this stuff, right?
Yeah, so, there's a legitimate
this guy's
number.
saying 270. I'm like, average estimate is 64, right? 270 for current year. Okay. So again, we'll see. We'll get the numbers here. It's not out yet, as far as I can tell. But we'll wait for the market to begin to build. Maybe we got something here. 1418.
Yeah, we're moving, but again, it's almost $2. There's $2. Now, I don't know if I'm going to say the F word here. Have you ever used Fibonacci's on a post earnings report? Dropping the F word. I don't know if Don's listening, but there it is. I just did it. I dropped the F word. One of my favorite things to see is something like this. Let it be a face ripper. Let it go through the moon. Yeah. If you measure from the low right before earnings to the spike afterward and measure that, a 38% correction is that 1/3 or 38% on the Fibonacci pullback usually finishes the retracement to the 61, if not all the way down to the low. And so there's a good 2-to-1 or 3-to-1 reward risk ratio that you can trade on fading those types of spikes or drops. if you see it reverse about 38.2%.
Yeah. So if we draw those.
And look, there it is.
Boom.
Boom.
Yeah.
What'd I just say? 38%
Yep.
and collapse all the way back.
Yeah. So I probably drew them wrong.
Yeah,
But
just low to the high. If
yeah,
it retraces
this doesn't seem
38%,
like
it
it was
finishes it.
released a minute ago or 2 minutes ago. We're seeing much more movement right now.
Yep. And there's the
Yeah, here we
420.
got
So
1420. So as we look at this, record quarterly revenue, 30 billion. And again, we got to remember, this isn't exactly just about what they did in the past. And so it's about the guidance as well. So for the quarter, diluted shares were 67 cents, up 12% from the previous quarter, up 168% from a year ago. The relevant number is from a year ago. So 168%. We already looked at the year-over-year growth expectations of revenue of 118. So that makes sense, right? That we're seeing big numbers from a year ago. But again, that's not everything that's in this, but they're probably beating on revenues, non-GAAP earnings per share, diluted 68%, up 11% of the previous quarter. So again, as we start to match what we saw here, again, 64 cents was the estimate. 67 or 68 cents obviously is a beat on that. Quarterly revenue, 30 billion, was up 15% from Q1, up 122% from a year ago. So if we look down here again, we're looking at the average estimate, 28.7, and they were at on the revenue side, 26 point. Well, that's data center revenue. Quarterly revenue was up 30 billion. So we beat the revenue expectations of 28.7. We beat the earnings expectations of 64. Now it's a matter of trying to figure out, again, is the guidance of this company in line with expectations? And as of right now, I mean, we're not seeing that we're still about where we began. So
the market had positive expectations. So you can
yeah,
have a beat, you can have analysts beat. I always tell my worst earnings trade ever was leaning heavy into eBay because they beat and they beat and they beat 20 cents, 20 cents, 20 cents, 20 cents, what the revenue came in at. And one of the times it came, or sorry, 22 cents is what it was, and it came in at 19. Analysts had it at 18. It came in at 19, but the thing is they always outperformed at 22. And so they beat analyst expectations, were exact same number as they would have been at before, but because it missed the priced in expectations of the market,
yeah,
it fell and was clobbered. I mean, it was destroyed, decimated. I lost, it was $20 a share down on eBay overnight, and it's back in like 2005. You can go look at the chart. But that's what we're looking at, is don't think that just because they beat analyst expectations, it's not necessarily what the market priced in. So the market evidently priced this well. It's doing nothing. So the double calendar
yeah,
and the double diagonal we were working at, if this stays in this area, it's kind of the sweet spot for
yeah.
what we did on those double calendars, because we'll get the vol crush and you'll be able to hit one of those peaks very likely in the morning. But
Yeah,
we've
exactly.
already got the information.
So again, so we think about it, if we don't move, let's say we're at the same point, this 188% by Friday at the close will be zero. We'll probably see this at least cut in half if we get a big move down somehow. The volatility can remain elevated, but you could easily see this around 95% at the open tomorrow. Easily cut in half. This back part, we might be trading around 50%. So that might drop to
The stock is
50.
77 when I did this earlier, price this
Put
earlier.
this at 77.
Yeah, no, I'm saying that's what the stock was. So
Yeah.
if you kind of ignore the extra implied volatility, yeah, that could collapse down to 95, 77. So you've got probably at least half of that going away in the morning.
Yeah.
Even if it starts selling off.
So the idea of calendars, you're selling this and buying this.
Yep.
This drops by a lot more than that. If that happens and the price doesn't move outside of the bounds of your double calendar, you're sitting pretty, right? So it could be pretty well. So we look right now, we're seeing that we're starting to fall here. We're at 125 at the close. We're currently 118 at the moment. So again, I mean, so far, again, the news appear to be positive on the surface. The stock is not responding as well. We're starting to see the sellers come in. We're down at 117 right now. So
and
again,
from the high shadow to the low shadow, you're almost at your 14 right there.
Yeah. Yeah.
You're
So
at
from the high
11
to low,
right now.
right here. Yeah.
You're about 11 right now. So
off of the close, if we take the 15-minute Yeah, 125. Yeah, so we're starting to see some selling right now. We'll have to kind of check. Shares are trading what? Trading lower. Doesn't say why, but professional visualization revenue 454 visible consensus. So that was above expectation. So again, expect to see a lot of the historical data looking positive. It sees Q3 revenue 32 and a half to minus 2% versus 31.7 billion was the estimate. So let's look at 32 and a half. That's for Q3 revenue. So if we come back here to our Yahoo here, come down to revenue, 31.77 billion is the average estimate. The range is from 29 to 37. The average 31.7. And so again, this is it's above above expectations of 32 and a half. Sorry, above 31.77. So you see that number there. Q2 2025. So this is a year from now, right? Sorry, 2025 doesn't make sense. 30.4, 28.
On your Guru Focus, I think you can see it a little bit better from the, I don't know if it updates that fast on the financials.
No, I don't think so.
Okay. Because I was looking at the trends in Guru Focus and on Yahoo Finance, but yeah, if it doesn't update that fast, that makes sense. One of the things I still go back, I was just going to go back and say, and what analysts do and what Brandon's doing and what everybody's going to do is they're going to armchair quarterback what happened in the ticker price. And they're going to look and say, what could have caused that, right? They're going to look at they've got to, let's see, I'm not a sports guy, so I was going to say you've got a receiver downfield on the ground, and you got five players standing around. Yeah, you don't know if they stumbled, the sun got in their eye, they got hit by someone else. So we don't know why necessarily, but we're going to look at and get the best estimate of probably why that's the case and see if that's going to be able to continue or not. I still come back and say this is the quintessential buy the rumor, sell the news. The market is always going to price in what it thinks, and everybody's been very positive about NVIDIA, so it priced it in initially. Now that we have the news out, the rumor is over and it's now news, and now we're saying, okay, was it really as good as we had hoped?
Well, and again, this was a huge move. I mean, this went from 90 to 130. It's a $40 move on a $90 stock. So this on a percentage terms, huge rally. And again, we think about priced in. The bar has been raised as by this imputed price increase. So again, it's reflecting a much higher expectation, maybe than what they're producing. And again, we know we've got a lot of retail traders in here. And so again, the idea is that they may sell at market, right? This creates volatility when weak hands begin to sell. And that's kind of where the market stands right now. Households own 39% of equities. That's the highest since just before the financial crisis. So again, we're, diamond hands, hodl, all that stuff goes out the window when price starts to decline, right? Fear starts to set in. So we're kind of seeing that we made back, what percentage of this? Made back about 61%. We're starting to roll over right now. So yeah, we'll have a lot to kind of show going into tomorrow, right, on the open after the press conference. But right now, again, we're basically being told, hey, we did it. We beat. Guidance is slightly higher. So reward us. It's the problem, right? Is that it's not the way it works in real life.
Here we are now. Entertain us.
Yeah.
I'm
so again,
stupid.
These are big numbers. But one thing when you look at analyst estimates is that we'll go back here to Yahoo for the minute, but this year, current year, 2025, this ends in January, right? So we still got 2 reporting quarters left. This was the big year. Next year's 38%. Expecting revenues to slow down a little bit. We look down here at 5-year earnings estimates, 46%. So can a stock maintain a 70 PE with 46% earnings growth? That's not, again, it's not a huge disconnect, but it's not a value stock, right? We've priced in a lot. And if all of a sudden we start to see any slowdown in the earnings and revenue growth, it's a problem. And if we go back to your focus, we look here, if they're going to defend their market share, it may take a lot of innovation. And what happens is if R&D expands, net income diminishes, right? And so if all of a sudden the TPU progression that Google started, Meta's continuing or beginning, and other cloud services, we start to go through a more, we're not so reliant on NVIDIA. It may take a lot of R&D for them to push ahead. The question is, can they?
Well, and keeping in mind as well, for those of it, when we're talking about increasing revenues and increasing the PE, that means you're saying a $3 trillion company has to increase. What's 10% growth on a $3 trillion company?
It's huge.
300 billion.
Yeah.
So the Russell 2000.
There you go. Right.
So that is a significant increase that you'd have to see to be able to continue that momentum. So not you, Russ 2K, the Russell 2000 index. Sorry, to be clear.
Eric says buyback lower price on the cheap. But the problem is 115 cheap? Is 110 cheap? Is 90 cheap? This is the hard problem that you have here with NVIDIA, is that the growth outlook starts to stumble, right? 90 may not be enough. We know that when the profitability pattern changes, this stock will typically give back 50, 60%. Our highs at 140. I could see us at $60 before we go back to 140 again. I'm not saying that's for certain, but if we look back at 2018, 2021, when we started to see that real just optimistic outlook begin to turn, the company lost a significant amount of value, over 50% in both instances. So $70 would be a 50% correction off the highs. That would be typical, commensurate with 18 and 2020, when we had 2021, when we had very, very high expectations in terms of NVIDIA's profitability. I would say $60 to $70 would be buying on the cheap, not so much so 110 or 115.
Hey, let me ask you a theoretical. How do you stop a freight train? What stops a freight train?
I mean, nobody. About Superman.
Superman. No, but freight trains, if they're going, there's nothing stopping them, right?
No.
You think it's just a matter of time, because you don't want to slam on the brakes. It's just time. To stop NVIDIA, time has to pass. But the number one way to stop a train is give it a hill. You cannot climb up a hill with a heavy freight train. Passenger trains
with all
can
these
climb
LSAT
trees.
Questions.
Yeah, there you go. I don't know how do you know that I'm taking the LSAT? Anyway.
Are you? No,
anyway, the whole point being that this is such a beast. It is $3 trillion to keep a train going upward sloping. That is a $3 trillion train. All you have to do is have a little bit too much slope and it's going to stop. And like I said, then for it to go downhill, it's going to fall back to its low point or roll back to its low point, even if it's stable on the tracks. But like you said, 30, 40, 50, 60%. I think it's a bargain at 60, sure, but not at 90. Certainly not now. This is not a bargain price for me.
Yeah, I'm with you.
So my analogy missed. It's okay. I'm okay with this still.
It's on. It was the slippery. You came full circle with it. The slope. Okay, the slippery slope of price. Right. So we started the slippery slope. We fall back. So I think it came full circle with that one, Blake.
Okay. Well, I appreciate trying to save
the slope
my analogy.
Of hope.
Thanks for trying to save my analogy. So yeah, and it doesn't just standard earnings, anything that you have at a higher pitched earnings expectations to be able to continue that momentum, it's just not going to happen.
Yeah.
So
comment on YouTube, you won't stop NVIDIA. No, they're going to stop themselves, right? And
yeah,
the reality is, I'm like, they have set the bar expectations here, right? The reality is likely going to be somewhat less than that. And that's going to affect the price, and it's going to be painful at some point. I don't know if this is the point, right? We may recover quickly, but at some point, it's going to, investors are going to get stung by that. Just again, I don't think their CEO is extremely responsible in terms of like setting reasonable expectations given where they're at.
Oh no, I think the gravitas of Jensen Huang is that everybody needs them, and there's really not a big barrier to entry, and everybody's already moving away from them. So his I don't know what you'd call it, a gravitas, piety, as far as him thinking he is the greatest thing ever.
I know, right?
It's that, I mean, it is something else. I thought Tim Cook was unearned in his gravitas, but
he's got no gravitas though.
Yeah, he doesn't know. So
at least Wong's got some gravitas.
Yeah.
He's got
So
some flair.
that's
But
right.
Eric's saying more Fed printing will support the whole house of cards. The problem is at this stage, historically, Fed easing generally is commensurate with a timing of that coinciding with a recession and a market correction of magnitude. So if they're
Assets could
coming
go
in
up.
right now, it's because they weakness.
Yeah, assets could go up and physical assets could go up and inflation can go up with the cut. But generally speaking, the first cuts see a pullback. In fact, every single one except for the 90s in the last 50 years have seen every cut have seen a pullback in the market into a bear market, except for the one in the 90s. So
the first cut is the deepest late in the cycle.
It cuts both ways, no doubt about it.
Now, if we only had Barry Manilow to play, so we had a
That's
side
right.
Skype chat earlier. One of the people at TheoTrade likes Barry Manilow.
I like Barry Manilow. I'll put myself on there. I
appreciate Barry as well, but like to be that your like number one go-to song or singer. Yeah.
Oh no.
So we had
not
a
my number
discussion.
one, but definitely. Here's the thing. I've said this before, and I'm saying this with NVIDIA too. So I'm going to type full circle here as we wrap this up because I think we're done moving until the conference call. Whether you like Taylor Swift, Justin Bieber, or Barry Manilow, I don't care. I don't care what your musical preferences are, but the fact is you cannot deny the track record. You don't get platinum, you don't get double platinum, you don't get triple platinum sales and sell at concerts and make $1 billion. Looking at you, Taylor Swift, you don't make $1 billion on a concert if you don't have demand. So no matter how you look at it, whether you like any of those people, Barry or Justin or Taylor, the fact is they sell records. The fact is NVIDIA sells chips. Whether you like them or whether you like the stock or not, the fact is they sell stock, they sell chips, they have great revenue, they have growth. But at some point, people stop buying the old album. So I'm going to say this could be the temporary top for NVIDIA. Is it going away? No. But could it be a lot lower, cheaper stock? Yes. But you cannot deny they make sales. All the previously aforementioned groups.
So Eric's saying that Barry writes songs about his dog.
That's we found out that's not true.
Yeah,
not true.
But it's not true. Apparently, I guess.
Yeah. So yeah, Barry Manilow's song is not about his dog. In fact, it was originally Brandy, but it was changed in the United States to not confuse with other songs that were released. So, but the one about not that I write songs, this one's for you was supposedly about his grandfather, and he actually wrote some stuff on it. So some songs, some analogies or some histories are true, but it was not about his dog. But I will always like you, Barry Manilow, Neil Diamond, Neil Sedaka, Paul Anka even.
Hey, I mean, what about Dan Fogelberg? He wrote a song about his father, the leader of the band, right? I'm like, he was a composer.
There you go.
It's the soft hits today on NVIDIA's earnings. But
it is. It is soft jazz today.
It's a soft reaction, right? And this is like I wanted fire. Other people want to see like massive upside. We're gonna both walk away unsatisfied from this. It's the elevator.
Well, it is elevator music today on NVIDIA. Maybe the conference call will shake it out. We thought it'd be all exciting, but we got to analyze NVIDIA. And thanks for digging into the fundamentals and the financials, Brandon. I am like you. I'm hoping for something that we can truly analyze from a financial fundamental basis to come back in the market. Value will be king again. But right now,
yeah. Hey, look, I mean, I'm looking for an opportunity to buy NVIDIA.
Yeah.
Right? This is a stock that, I mean, look, I mean, 2023, there was significant option activity January 9th, that week in NVIDIA and AMD, and it kicked off this massive rally and kind of the similar scenario going into 2024. I mean, we had positive all skew. I was like banging my drums, like, dude, if you're going to be long the market, buy call spreads on NVIDIA, take advantage of the skew. And right. So now we're at the other end of it. Now I want it to go down so we can reset. So anyway.
Yep.
All right, well, folks,
and there'll be a time to buy
today. CRWD. Yeah, they got earnings as well. But we'll see you back on Friday.
All right. Yeah. We'll see you live Friday, and the rest of you will see you in the main room tomorrow. So have a good night.
Have a good one.